Check, check, quick sound check. Can everybody hear us loud and clear? What is going on, Coach Paul? How are we doing today?
I, I can hear you loud and clear, Coach Jay. Um, what a day!
What a day.
That day. You can't keep a good stock market down. And boy, did we see that today.
Man, absolutely making new all-time highs in the Nasdaq, making new all-time highs in S&P. The rally continues. You thought yesterday was the pullback. I saw a bunch of chatter about here's the limit down, it's coming. But when you send 12 CEOs of the biggest companies in the world over to China with the president to make a deal, sounds like the precursor to doubling the stock market to me, Coach Paul. So, uh,
Uh, it worked today. And with some concerning news in the interest rate field, we'll go over that later. But highest yields, I think, since 20, 20
2007.
years?
Yeah,
2007, yeah.
Jack was mentioning that the 30-year yield is the highest we've seen in 20 years. So I think conventional wisdom would say that the market should be a little bit concerned about it, but for right now, it looks like it hasn't hit the tape just yet. But welcome to At the Buzzer, our market recap. Everyone, if this is your first time here, the goal of this segment is to review what happened in the markets for the day. May talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. I am Coach Jay. That is Coach Paul. You are all the chat, our audience. Thank you for joining us here on this Wednesday. Let us know how you guys did in the chat. Were you up on the day, down on the day? Anything that you learned from trading today? Did you get on the train to the upside? Were you trying to stop the momentum? How did that work out for you? Most importantly, did you follow your plan? Did you manage your risk? Let's take a look at some of the economic numbers that came out. We have Cisco reporting earnings as well here. Cisco earnings per share came in at $1.06. Estimates were $1.04. Revenues 15.8 bill. Estimates 15.57. So continuing the theme of these tech companies beating their earnings. I can take a look in a second at Cisco's weighting in the indices, but shout out to Cisco, another company beating its earnings
The-
as well. Go ahead, coach.
I was just going to say that is the theme of
Oh yeah,
earnings season, beating the expected.
Every,
So
everyone's a winner. Cisco's up 12% off that move. Closed the day around $100 and is trading 112s now. And that is a new all-time high in Cisco. Literally everything is making all-time highs. Uh, there's a bunch of stocks doing it. The equities are doing it. We heard the president
rinse
say,
and repeat.
yeah, we heard him say in the beginning of the day, sorry, beginning of the year, we are going to double the stock market. Had a little dip, but this is looking pretty strong. Keisha says that was uh, one hell of an intro. Thank you. We appreciate it. Hopefully, you guys enjoy the show. We got some stuff to talk about. Coach Paul, we had some numbers out this morning. Uh, PPI, inflation is also going up uh, a lot.
A lot and larger than expected. So we had CPI yesterday, PPI today should drive the stocks in a fundamental sense down. But I'm going to quote a great quote from Reminiscences of Stock Operator. Um, he who sells what isn't his'n buys it back or goes to prison.
Yep.
And early this morning, that's what happened in stocks. We get off that news. We had shorts
Yep.
and no follow through, and we'll go through it later. But buy the dip is still in play,
Still working.
and
It's still working. Works until it doesn't. Uh, yesterday was more like buy the crater, but again, markets making all-time highs literally 24 hours after. Extremely resilient. Man Cave saying CPI and PPI giving us some urgency trades. We definitely want to look at that because there were some nice shorts off of those inflation prints. But US PPI year over year came in at 6%. Forecast was 4.8. Prior number was 4%. So 2% higher than the prior number. And Jessica Inskip was on with us Monday. She talked about the PPI number. She was on with us today as well. That PPI number is likely going to affect CPI next month. Producers usually go first, and then how the downstream effects to the consumers. The CPI number was hot yesterday. So next month's number should be pretty interesting, especially if these oil prices stay where they are. Core PPI came in at 5.2%. Forecast was 4.3%, prior 3.8%. Isn't that because of gas and oil prices? Yeah, probably. But when are they coming down?
Well, and does it really matter in stocks?
Right, right. Yeah, and that's the thing. Stock market doesn't care, and Jessica made a point, Coach Paul. We say it a lot. You know, the markets are going to do what they want, right? The equity markets are built to go up. They're kind of shaking off any bad news. And a quote from Jessica this week was, "The market is not the economy."
No, it's not. And it also each everything we trade individually is an auction market in and of itself. And so remaining in the present, watching structure in what you're trading is the key. When you're watching news, you can get into a predictive mindset. Well, and I've been through it. PPI, this has got to go down.
Oh yeah,
And
no, it doesn't.
so measuring each market in its own structure is one of the keys to successful trading. You can know the news, but how does the market react to the news, and balance and imbalance is going to give you much better information than the headline itself. And believe me, I fought it, and I've said it before. In the late '90s and early 2000s, I sold the Nasdaq. I sold every high.
Kept going
The
higher.
only problem was I kept it, had to buy it higher. So understand that whatever you're trading, trade it on its structure, its merits.
Absolutely. What do we got? Green on the screen from Man Caves. Shout out to Dan Trader in the chat. Good to see you. Christian up 200 with the MNQ. Nice job. Phenom says, time to find out the easy trades I missed out on today. I don't know if I would call them easy, but there were definitely some opportunities. But everyone else, let us know how you did today, and we will get to the quote board. Cisco is still rising. Cisco is up 15% after that earnings report. Looking at the quote board today, we got 36 different markets we can trade with Topstep accounts today to the downside. Micro Bitcoin down 1.53%. RBOB gasoline futures down 2.18%. And heating oil, our biggest percentage mover to the downside, down 4.83%. I've seen a lot of crypto Twitter talking about, man, they're ready to retire from crypto and just start trading the stock market because it's going up.
Mm, That that's interesting comment.
Yeah, the
Uh,
gains are moving back to traditional finance. Crypto bros are like, when is it going to be our turn?
well, the volatility is coming out. We saw that in Bitcoin today. We can go through Bitcoin later, but that's interesting. So just like anything, they're chasing yield. They're chasing volatility.
Where's the opportunity? Where is the
They're,
opportunity? Right now, it is in the stock market that's up 30% in the last month and a half. To the upside, we have platinum up 2.52%, soybean meal up 2.92%, and silver, our biggest percentage mover to the upside, up 3.12%. To talk about our big four, we had crude oil down 0.86%. The S&P making new all-time highs today, up 0.63%. Gold up a quarter of a percent. Gold is just like losing any momentum. It is just a flat market. We'll see that on the daily. And we got the Nasdaq also making new all-time highs, up 1.2% on the day to wrap up our big four. Looks like Joseph in the chat. I made 1,200 today on 5 Express accounts. Nice job. Kyron, I passed my 5th combine today. Trade well in those XFAs. Green day for Antonio. Just lost 0.5 R trying to short the lows, but still green today, 2 R. Antonio, I love the way you put in that, man. That is not a dollar amount. You are measuring in risk units. Made 2 risk units today. That is a great way to put that. Taking the focus off of the money. Of course, every decision that we make in trading has financial implications to it. So the less we can focus on the money and more on the process, uh, better it is for your process probably. Uh, Bink,
Donald Morris
good.
was up 14. Donald Morris up $1,040 on a 150K combine. Great job.
There you go. Down in my XFA, but stay within my DLL for Dan Trader. That is called process. That is called risk management. Great job there. What market do you think I traded today? Says Bink. The Russell, 100%. Got short the Russell, took your wins, and got out of there. Uh, Gold, great for mean reversion back to 4,700. Aaron, absolutely. If you're going to trade gold and you're a range trader, time to eat. Rich pocket, last one here. Two shorts and one long on the ES, three Ws, smaller size, and definitely practicing patience and execution. Good day overall. Christian followed the plan, preserved capital. Awesome stuff. Think because when the Russell is moving, you don't need the Nasdaq. But we are going to take a look at the NQ today because it did make new all-time highs. Genius Monkey made 40 bucks today, slowly breaking the losing streak. Love to hear it. Daily chart in the Nasdaq. Coach Paul, what are we seeing here?
Up and
Pattern.
to the right. Continue that pattern. That pattern keeps weak sellers yesterday with that wick and the recovery late. And once again, a high, all-time highs, all-time high close. Nothing in this says it's ending anytime soon. It can change. Give me an outside day or an engulfing candle that takes 3 or 4 days. But it's not there now.
No.
And this is really starting to remind me of the Nasdaq rally in the late '90s.
Hmm.
We
How did that
we've
come to an
touched
end?
on it. Earnings came out, and then everyone was in, and but it ended with an engulfing daily candle, an engulfing weekly candle, and then it cascaded down. Now, it's not here now. Can it appear? It can appear at any time, but right here, right now, who's in control?
Buyers, and they've been in control.
Yeah, I hate to be a flare for the obvious, but yeah, they're definitely in control. I don't I don't want to fade them.
No. Not for a very long time. I took a quick scalp short towards the end of the day into that MOC, but outside of that, it is not a comfortable feeling for me being short this market at all. It kind of feels like if it wants to go down, it can do it without me. Because if it does turn, like we've been talking about how much easier this market has been to buy than to sell for the last month and a half. If it turns around and this complete trend changes, we might have another month and a half of just really clean sell opportunity. But for right now, it is just hard to do. Can you do it? Is there opportunity to make money? Look at yesterday, we had a 750 point sell off day. What's dangerous about this, and Dakota has been talking about it, right? Where he's just like, he finds it hard to buy this market right now. To me, the dangerous part about making money to the short side on a day like yesterday is that you try to go back and repeat that. And when the market's just grinding up, that might happen once every week or two, if that. The pattern that I really like that we're seeing here, Coach Paul, is kind of this measure move pattern. We see this big up day, get a couple of days of consolidation that doesn't take out that low, and then we break to a new high. Then we get consolidation inside that range, we break to a new high. Break to a new high, consolidation inside that range, doesn't take out the low, break to a new high. And it's continuing to happen time and time again. 30,000 in the NASDAQ is in range of this week. It's in range of a full daily ATR move to the upside today. If we don't really see much selling, 30,000 is within 500 points. Um, Today's high to low range in the Nasdaq is
509 points.
509 points. Daily ATR 484. Uh, Maybe 30,000. Shout out to Michael B, who was on Fast Markets with us yesterday. He said, I've been looking to sell the Nasdaq since 28,000. That got ran over. I'm not looking to sell it until 30,000. Big fat round number. From the lows up to 30,000, I think we would be somewhere up about let's see. Yeah, that'd be about 30%. Maybe some longer time frame market participants want to take some profits up there. But we'll see when we get there. It's a big fat round number. We watch the market's response to big fat round numbers all the time. But for right now, it has been a little bit easier to make money to the upside for now. Let's take a look at the 30. Man, here's
Well,
last night's open.
look at the pivot. First thing,
Yeah,
where the pivot, it was above the 200. We
pivot is
had
this orange line on my chat. Chat, give me a little feedback here. We added the pivot points to chart here. Does it make it look a little confusing? Or do you guys have any suggestions for changing the colors of the pivot? The horizontal orange line here is the pivot. Want to make sure this is visually making sense to all of you guys. It makes sense to me, but want to make sure it's coming across clear here. But we got that pivot right there, Coach. 29,110s.
Yes. So we open above, we have obviously VWAP above, and we break out into new lows. We closed under the pivot, but where's the white line? Now, you can be short at this point, but understand we're still above that 200 on the 30-minute. And I found it interesting with this China news is now the headlines. What happened when China opened up? That's the 7 o'clock. Yeah, it kind of looks like gold about 6 months ago, doesn't it? We had buying. We closed above the pivot and above session VWAP.
Inverse Paul
Yeah,
drop.
it's an inverse Paul drop. Yes, it's a Paul up. And then we leave the range. So at that time, that half hour was the largest um, volume. So we had big buying, we reclaim VWAP, we leave the range. We've already tested the pivot and the 200 moving average. So if it was going to break, it should break there. But what did we get? Big buying. And we had a micro melt up um, where we didn't reach the first level of resistance. But looking at yesterday's pivot, we got into that range. Um, and it was a great rally. But what happened when this doesn't this remind you of what the gold market a few months
Yeah,
ago?
yeah, it does.
What happened when we got to Europe, to London? Frame that opening out.
Here is the London Open here. Still a little bit of buying. But we made an attempt at the all-time highs in the London session. We got the pullback. Kind of not surprising with that CPI PPI number coming out.
Mhm.
But London sold us off a little bit into the PPI print, which is this 30-minute candle right here. Now, this PPI print, if you were joining the opening call, shout out to Westy. Out of Westy, I don't know if you're here, but one of the things we talked about during the opening call, Coach Paul, is that PPI print. We saw it yesterday uh, in CPI with the Russell. I want to go to the Russell charts when we do this, but the PPI print at that point of the day was the highest volume 30-minute candle of the day, and it closed back below the session VWAP, and it wasn't a good number, right? So looking at this and saying, okay, I still want to find an opportunity to buy this. And we talked about this during the opening call. I want to buy failed selling, but on this PPI print, it doesn't look like the sellers failed. They actually achieved something, and that was getting back below this regular trading hour VWAP. I'm gonna go down to a short, but chat. What do we have here?
This was
It's the money
this
line
was the money line. And where was that at? Look at how
at the pivot.
the pivot and the 200 were there. And we had all that selling. But all the king's sellers and all the king's men couldn't take it under the pivot or the 200. And what you defined is where was bad selling.
Exactly, and I think the reason we're breaking this down, and it was the same analysis that we had for the opening call, and I asked Hogue, I said, I know I want to buy this, but what I have to ask myself is, with this information that I have here, okay, I'll take these labels off so we can actually see. With this information I have here going into the equity open, is this the failed selling? Or when the volume comes in for the New York session, are they going to attempt it one more time? We saw it yesterday. That CPI number came out. We had a knee jerk reaction. Then we sold off before we eventually made that V shaped recovery. So like, my thought process was I don't want to buy it right away off that New York session open, because if they show us that they're going to try to sell it again, there is a very good visual target right here that they could attempt. And shout out to Westy. I think you took that short. I don't know if Westy's in the chat, but looking for the market to go and test that 200 moving average again, because we actually didn't test it all session until that New York session open and that pivot right there again. So let's take a look at the 3-minute chart. I think this was just beautiful price action today. Really nice opportunity for anyone to take a short. Here is that 3-minute opening range from the, 3-minute range from the PPI print. Man Cave was saying that the news prints have been giving us urgency trades. If you're a new viewer and you're wondering what we're talking about when we say an urgency trade, I use a 3-minute chart. You can use a 30, you can use a 1, a 15, but in relative time, in this case, in 6 minutes, we had price and volume leaving this PPI print to the downside. If you were in this short with risk on the other side, that is a hell of a trade, right? And there are going to be pullback opportunities in this market, Coach Paul. But where did it stop?
How many times? And look, we had that hammer candle. So we explored underneath the pivot in the 200. And we had some heavy selling there.
It's the highest volume selling outside, highest volume 3-minute candle outside of the open on the day.
So, and where did it go from there? And that could that's a J trade.
It is. It is.
So
curious in the chat, who took this? Anyone in this get in the longs here? It looked ugly, but sometimes the ugliest markets, Coach Paul, are just setting up for. It's
the
like
hardest trades are usually the best.
yeah, and I think where you get in trouble is having Coach Paul with the equities. I'm adopting the Coach Paul school of thought that I only want to take one side of this market. In doing that, what really helps is I know that it would be naive of me to think that every time I look at the market and I try to buy it is a great spot to buy. That's just not realistic.
I had that lesson from Peter Stottlemyre when I was struggling.
Yeah.
And he told me, just take one side of the market.
Mhm.
He says, you're trying to buy low and sell high and you're getting spun around. And I'm like, of course I'm trying to. But the focus is what happens is you're looking when you're in an uncertain environment. We can help you eliminate or at least rein in some of that uncertainty is to trade one side and look for, in this case, failed selling. Where you can get into where you really get spun around and lose big money is you got long, it breaks the new lows. Well, obviously I'm wrong, and you get short, and then it turns around, and then you have no control.
Spin cycle.
I've done that.
Yep.
And so taking that one side, we are in a bull market. There's going to be selling, and then and we saw it, but it sold down into support where we had shorts for the day, and it looked bad. I mean,
oh yeah,
PPI, all this news, and it hit the wall
hard. Hit that wall hard. 29,100 is there. The pivot was there. The 200 moving average on the 30-minute was there. In a market that's up 25% at this point in the last month and a half, this is what we mean when we say buy failed selling. Let them do what they're going to do. Don't know how far this is going to go. Yesterday, if you just said, oh yeah, this is an up market, we're just going to buy it. It was a 750-point sell-off in the Nasdaq from the high of the day. You could have lost your entire account trying to buy this, being married to that bias. But if you identify where that failed selling comes in, and I thought I saw it yesterday, right? I told you guys the loss I took. I thought I saw failed selling. They did fail for a couple minutes, but then they continued, right? They had more to sell behind it. But today they didn't. And that high volume closed above that high, highest volume of the day outside of the open, closed above that high, and that's a great sign of a reversal. That's a Dakota 3 bar reversal. That's the J trade. We had volume eventually leave that range to the upside, and it wasn't super clean, right? If you got long here, still had an 80-point pullback. From if you got long on this candle close, this is still at 80 points to the downside, which is why we can't over leverage. Back to that question yesterday, somebody said, "Hey, why aren't you trading the minis?" Because I don't want to sit through an 80-point drawdown with a mini on. And really, my stop isn't that 80 points; it's further than that. My stop should be on the other side of this range, right? Which is more like 120 points, which gets kind of expensive. Now, you could have waited until VWAP started to leave this range to the upside to get in long. That could have given you some more confirmation and less of a drawdown. But either way, there's no free trade, right? So you got to put some type of risk on.
It-
In this case, really, the risk is about 120 points. It paid off because if you're risking 120, you had an opportunity for almost a 3-to-1 trade at the highs. Not saying you capture the whole thing, but buying that failed selling, letting the market do its job from that point, presented a really great opportunity.
well, you said, if you're looking for the perfect in, it's not there. You have to deal with that uncertainty. You have to pay a price. There's no free trade. There's probabilities. And we've said this before. This is a high probability trade. You had a lot of confluences in there.
Oh yeah, one of the cleanest
Um,
ones we've seen in a while.
yeah, um, and being patient for it. So great trade, and right up to it really didn't stop till we hit the first level of resistance, where
Right.
it did start rotating around that area.
Yeah. Courtney, I love this comment. I'm becoming a believer in first pullback entries. Second mouse gets the cheese. What was that quote we used a while ago, Coach Paul? Don't buy the first wave.
Uh, that's an old saw,
Yeah.
and I was using to get in the market. You got to give the rat some cheese.
Yeah. Yeah.
Um, but there's an old saw in the market is don't buy the first breakout. Get get the correction. And
Yeah.
actually, we saw some of that here on that breakout. Where did it go to? To to the 50% line.
Oh yeah. Yeah. Right. Exactly. That first one could have bought it, but if you're okay with an 80-point drawdown, and if you go with the Coach Paul drawdown, your stop should have been 90 points, 2 ATRs, right? On a 3 minute would have been 90 points. You would have been sweating, right? Especially if you didn't accept the risk, you would have been sweating. But even then, the 90-point stop wouldn't have gotten hit. The question is never about what we've measured. Coach Paul, I've been reading the Way of the Hunter Warrior again.
Oh, great book. I'm gonna have to pull that out again. Oh, we lost your
You lost my audio. Can
Coach J. We lost your audio.
you hear me now? Check, check. Can you guys hear me, chat?
I can hear you now.
You can hear me now?
Now I can.
All
Yeah.
right. All right, cool. So The Way of the Hunter Warrior, Julian Snyder is a great book. Again, suggestions by Coach Paul. I've been reading it again, and he makes a lot of comparisons to being in the financial markets and being a samurai. And one of the things he talks about in the book is, it's going to sound grim, chat, but I think it's a good way to put it, is the samurai chooses death before the war, right? Where it's just like, okay, I'm going into this knowing what the risk is. And if you can't accept that, then you can't actually be an aggressor at all. And in this case, if you can't accept that 80 points is the drawdown, you can't take this trade, or you can't take it comfortably. And then when it's time to be the aggressor, you're never actually going to see the reward because you're thinking in fear the entire time, right? But if you measure what this risk is, there's nothing else to do but to let the market work. Um, Great book,
Because
great book, great
at
suggestion,
that
coach.
point, if you've really accepted it,
Hmm.
and this is where we talk about you don't have certainty, but you have a probability.
Yep.
And it's a market function. You put that risk on, and I like take 2 to 1. You don't need to watch it.
Right.
You can watch it all you want. It's not going to change anything. What it will do is create anxiety. Every tick starts. If you get into that anxious mode and you like the trade, quit. Go watch another market. Staying in there watching every tick is going to just create uncertainty. So if you like the trade, we know this from the Trading in the Zone by Mark Douglas. Predetermine the risk, accept it, or don't take the trade.
And you get your 2 to 1. Really nice trend day up in the Nasdaq. Looks like it is ready to continue. We'll see what happens. Are we on 30K watch this week? I'm gonna bet yes. That meeting again is tonight, starting at 10 p.m. Eastern time, I believe it is, or 11 p.m. Eastern time. Again, the meeting we are talking about is the President Trump with tech CEOs in China meeting with President Xi. I'll get you the list here for anyone who might have missed it. Elon Musk, Tim Cook, Larry Fink, Steven Schwartzman, David Solomon, Jane Fraser, Kelly Ortberg, Michael Maybach, Ryan McCurney, Larry Culp, Sanjay Mehta, Cristiano Aman, Brian Sykes, Dina Powell, Jacob Dyson, and Jim Anderson. If those names don't mean anything to you, maybe these do. Tesla, Apple, BlackRock, Blackstone, Goldman Sachs, Citigroup, Boeing, MasterCard, Visa, GE, Micron, Qualcomm, Cargill, Meta, Illumina, and Coherent. Those are the tech companies
Art,
meeting with China right now.
well, we haven't heard that name of one of the biggest, the greatest companies.
What's that?
It's still a private company, Cargill.
Uh,
Yeah, I mean,
for the grains.
the grains, energies, they're in things you don't even think of. They're massive, and they're private. It's funny that just set off a flag for me. Cargill's coming there, and you said grains, and they want to sell soybeans.
Mm,
Now, we've been shut out of that market. Interesting that it invited Cargill to go. And Cargill stays very quiet. They could care less if you ever heard of them,
really?
right?
Yeah.
But just about every day you touch one of their products.
Interesting.
Just really great. They are the epitome of a great. They are an epitome of a commodity giant.
Huh. AJ says I used to work there. Uh,
Yep.
we're not going to ask for inside information, AJ. We don't want to get in trouble. They're watching. But they're at the meeting with President Xi as well. All right, that is what we got in equities. S&P, very similar day. I do want to take a look at the Russell. The Russell took these inflation numbers a little harder than everything else did. Here is that first 3 minute candle on the PPI print. See, we tested back inside of it, but another sell there. And then let's take a look at the Russell really quick on the daily. Uh, Holding that 20 moving average on the daily. These are all-time highs up here, but taking some hits over the past couple of days, not really recovering as much as the S&P and the Nasdaq, and the Dow at 20 moving average on the daily is the trend line.
Hugging it. It feels like it's compressed. It's either going to smoke higher
Yeah.
or break. I mean, just hugging that. That alone, some great trades. Um, but is is that a flag? No. But if the Dow is just compressed while the Nasdaq is just going.
Running,
Um,
running. Dow hasn't made an all-time high since February. Everything else made all-time highs either today or last week with the Russell. Uh,
so can we say risk on?
Risk is on for sure. Let's take a look at crude oil here. Pixie Aura in the chat has a question. How important is it to have a 1 to 2 risk to reward? I find it difficult to find trades that offer that. Is it okay to stick to 1 to 1? That depends on your win rate, right? Risk to reward alone is not enough to look at. But Pixie, I asked a follow-up question. What market are you normally trading and what is your risk point wise? And we can give some suggestions from there. But Pretty Lily, thank you for teaching how to use the news candles as trading ranges. I saw that when the ES closed within the CPI candle. I went long on a break and retest. Man, love to hear it.
Yeah,
Go ahead, coach.
that's a great way to look at it. I'm glad, pretty Lily, that you followed that. So we talk and we preach this: don't trade in front of the news. Trade the information you get from the news candle. And wow, we're good. We haven't seen that in a while. I really love to hear
The
that.
news candle
Great
trades.
job.
Yeah, we kind of stopped talking about them. Honestly, we stopped talking about them because the market stopped caring.
Yeah.
It seems like it cares again. At least for the short time frame. Over the past couple of months, the uh, you know center stage has been what's going on with the war in Iran, but it's taken a back seat, especially with this meeting going on in China right now. Framing the news, it's been the way, absolutely. Okay, so Pixie Aura, real quick, we'll go back to the S&P. Uh, Said you are risking on the 5-minute chart 2 ATRs. So let's take a look at the S&P during regular trading hours, which I assume you're trading. On the 5-minute chart, Coach Paul, the ATR during the most volatile time of the day was around 7 points. Uh,
7 points.
and Pixie's risking 2 times the ATR, so 14 points, in order to make uh, 28,
28.
right? So let's just put that on real quick. And Pixie's saying, it's kind of hard to find 14 to make 28, right? Kind of hard to find 2 to 1s. Obviously, today is going to be a lot easier, right? But here we go. Now, trade location matters on this, right? On this 2 to 1 risk to reward, right? Here is why would you have taken along here? See, it can be difficult. It can be difficult to get a 2 to 1. Yeah, trade location is going to matter, right? But here is okay. Why would somebody have gotten long here? Here's the opening range in the S&P. We closed back above the regular trading hour view up, and we got a nice push. That's a valid trade, right? I didn't just pick a random candle. I get long here, risk 14 points to make 28. Eventually, the trade plays out. Now, if I'm, let's see, up here, the ATR was 6 points. So I'm risking 12 to make 24. And again, today was an anomaly day. The market just went up.
Like, here's another thing. You still made money on the trade,
Yeah,
but you talk. It's late. It's late in
exactly.
the auction.
Exactly.
1 to 1s are different. Early in the auction, 2 to 1s are much easier to get
Yes,
if you're going to do it. And if you're doing well on 1 to 1, don't change it. You're, I don't, I'm telling you, that's what I look at. That's what I find reasonable in a day trade. And if you have an edge or you have a trading plan that, let's just say it's right 50% of the time, right at randomness, right? But you manage your risk, you keep the account alive, and over a series of trades, over 100 trades. If it ran at 50%, you made good money
right.
versus trying to hit you know, versus trying to hit a home run every time or trying to hit a grand slam. I, that can happen, but it's going to be a lot less percentage. 1 to 1s, if it's working for you, fine, but I would do is see if you can give it a little more room if it's early, less room later in the day.
For sure. I think with the 2 to 1 thing, I think, and you'll hear Coach Paul and I repeat a lot of the same stuff during At the Buzzer. But I don't. Why does my brain always do these weird metaphors, Coach Paul? Every time I have one pop into
So
my head, I'm just like, I don't know if I should say that, but I'm gonna say it. I've heard
leave the dogs out of it this
bear with
time.
me, chat. Bear with me, chat. But I've heard a pastor say that you can't take the Bible in pieces, right? You have to take the entire thing, right? You have to take it in its entirety. right? And I think some of what we're saying here, if you just take a piece of it, right? If you only take the 2-to-1 piece, but you don't take the get your trades on close to volume piece of it, you don't take the there should be an urgency trade, then you're missing a part of the puzzle. Uh, and I think sometimes you might just hear one thing again. So, chat, I'm sorry, man. Uh,
Oh, keep going. Keep
but
going.
if
We should have a book of these.
right, but if you only take a piece, then it may not fit into everything else that you're doing because you're not taking the whole picture, right? So for me, I look for 2-to-1 trades because I'm getting my trades on close to volume. I'm identifying that there's urgency in the market that is telling me that there are conditions that say there's potential for follow through in the moves, right? If I'm looking for a 2-to-1, but the market is telling me range, then I have to make an adjustment, right? Because for me, a 2-to-1 trade should come from a potential momentum trend trade in the market. If that's not what I've identified, then I can't personally. I don't look for a 2-to-1 because those conditions don't facilitate it, right? So getting a trade on close to volume that has potential to flow for continuation is the full picture. Um, and like Coach Paul said, if 1-to-1s are working, keep doing it. Take a look at oil. I gotta. I don't know, man. Here's oil, Coach
Yeah.
Paul.
All right. So we had urgency last night on the sell side. Now look at what I do want to review what happened yesterday. We had a big rally, right? We ran up to the second level of resistance where we stopped cold, right? We rotated just underneath it. So last night on the open, we framed that at we had what? Urgency. We had that breakout of the first half hour with session VWAP. And we had the largest selling at that time. We went right to the pivot where we stopped. And this is something watch pivots. Just using a pivot just as price doesn't tell the whole tale. What happened when we closed through the pivot? We can attach an anchored VWAP.
Closed
First
under
close
it.
under. Yeah.
Got you.
All
Okay.
right. So we did get some follow through.
A little bit.
And so if you're short, we don't have certainty. It looks good. But what happened when we got back above the pivot? And where was session VWAP when we got through the pivot?
Above it.
Above it.
We're extended.
So just reading the market there, if you're short, you should have good, you have a reason to. But that's why we can just blindly, and we say it all the time, measure your risk. Focus on risk management. Here's if you're short there, what's your out? Well, to me, the first out is a 2 ATR. That's and that is the seat rejection. Like, holy, I
Yeah.
was wrong, right? Doesn't mean you have to hold on. But what happens? We get new information. First, we close back above the pivot, right? But most importantly, what happens when we close back above the session VWAP after touching the pivot?
Here's a close. Here's a close at it. We won't even count that one. We'll count this one right here.
Yeah. All right. You could
Candle doesn't
frame,
break.
and now we tested the pivot in price. We found that there wasn't the volume under there was weak. All right. Now we had real buying back above session VWAP. And one of the things we look at is watch session VWAP, the price as we closed above that. It starts inching up.
Yep.
It can't inch up unless there's buying.
Right.
Because it doesn't lie. It's a function. And so now we have two companies. We have bad shorts and new buying.
Yeah. Perfect
and
recipe
that
for a
has
rally.
for a rally, and we got that. And where did we rally to? The area of the first level of resistance, which was this morning. And at that point, it looked like it could go, but it hasn't. It hasn't.
No, it
It
hasn't.
got up there, but we just start rotating underneath that.
I want to
It's
go
there.
back out to the
That's it.
daily really quick here, Coach Paul. Uh, so I love this question, man. I love this question. Check in shorts. Look, I know we look at this in hindsight, but how do we see this a little while earlier? By seeing it in hindsight 100 times, 200 times. Uh, who has been an at the buzzer viewer here since it started on YouTube? Just out of curiosity. Put a one in the chat if you've seen the first at the buzzer episode on YouTube. And if you're a one in the chat, is anything we're saying here news to you? Man, there's a lot of questions. Been here a while, M's. Yellow Ice Cap's been here, right? Genius Monkey has been here. Is it news to you? And are you starting to see some of this stuff in real time? Sometimes, and check in shorts, I think that's the first time I recognize your name in the chat. Sorry if you've been here before. Sometimes there's traders. There's a trader like Bink in the chat. There's Westy in the chat that you guys are calling out trades to me that we talk about here. So after a certain amount of time, when you do something repeatedly, right, just like any other sport, right? When you practice, a team might go through, a football team might go through some drills, or practice plays against the team that they're, against a practice squad for the team that they're going to play next week. So when they play them in real time, obviously in real time it's going to be a little bit different, right? The game speed is different. You're playing against an opponent that actually wants to rip your head off, and they're not on the same team. And that's the market, right? When we do this here, we're doing game planning. The market's not going to hurt us right now. In real time, if we don't make the right decisions, that's when we get hurt. But when you do this 100 times, 200 times, 300 times, and you see the same thing, then you start to be able to slow yourself down when it comes to decision making in real time. So if you have any questions about what we do, maybe take some notes, but do some of the things that we're talking about. Coach Paul, one of the things that I know you do day in and day out is what did Coach Paul just say here, right? When we get a 30-minute candle to close below the pivot, what do we do, Coach Paul?
We anchor a VWAP to
Anchor
see,
VWAP.
look for volume following through.
That's information. Now, this is happening at 12 a.m. This is happening at midnight, New York time. Maybe I'm not trading at this time, but by the time I get to my charts, I can do that, right? So I can see, okay, we attempted to close below the pivot, and you can do this. If you watch me for the opening call, I'm using some of the same analysis that we're doing in review, and we're doing it to prep for what the session might do coming up. We talked about selling above 103s in oil before oil got to 103. How can I even make that assumption? And I never want to assume that we're right, Coach Paul. But when you see something happen time and time again, you can start to make assumptions about what happens, and then you find out whether or not the market is going to agree with you.
Well, so what are we reviewing? We're reviewing the market action. And in that, as you develop as a trader, you need to measure the market as it moves. I completely agree. Because this isn't about finding certainty.
Correct.
It's about observing market action. And when you do that, you see certain patterns
Yep.
repeat themselves. That's what the auction market theory is all about. It is, where are we? We get information a little bit at a time. But with that information, we start seeing structure. That's what we review.
For sure.
And that's why we do this. And, you know, you don't, it helps. It's helped many traders. And by the way, this is what professional traders do. And from my 40 years of experience in working with Peter Stottlemyre, this is what they do. That you it isn't, hey, this market's going to go up and I'm just going to buy it.
No.
You have to have some structure.
Yeah.
You have to see buying versus selling, who's in control, where there's that's what we review. So we're really reviewing and teaching structure and risk. You can trade how you want. We have never. This isn't. We're not telling you how to trade.
No,
No, this is reviewing and observing.
absolutely. One of the things I'll also say, and Wesley just called it out in the chat, right? It was amazing to see the S&P trade down to this 200 moving average. That white line, how long have we been talking about that, right? Since we've been doing at the buzzer in Discord. When you see it here, and if you, what I would say is if the, and it doesn't have to be from us, anytime you learn anything from anyone, I think one of the best ways to just be impartial and verify the information, and this might sound counterintuitive, is to not make a decision behind that information right away, right? If I'm seeing it and then I'm putting money at risk, I can't be impartial to what's happening, right? I think, okay, we got down to the 200 moving average. I bought it, so it has to go up from here. That I don't think initially should be the goal, right? It should be I'm watching how the market responds to the 200 moving average and if it presents an opportunity. Because sometimes we're going to get to this 200 moving average and it's going to bounce. There's going to be other times where it gets to this 200 moving average and it sells right through it and continues to sell. And if you put money at risk right up front before you identify what circumstances facilitate a bounce and what circumstances facilitate selling through, then you're going to think, hey, that strategy doesn't work. And it doesn't matter what strategy it is, right? If you don't know your strategy enough to know what it looks like when it doesn't work, you're never going to be able to truly trust it. I told you guys I took that long in the Nasdaq yesterday because we bounced off of the second resistance and we had a J trade. I knew exactly why that trade didn't work. Coach Paul, we talked about this yesterday. It didn't work because we stopped at full session VWAP.
Sellers were in control.
They were in control.
I
So
don't-
I could buy it and doing all of this analysis, you might still take a trade that's counter the trend.
yeah, you're better than I. I can't do. I don't do that profitably.
Yeah,
So part of this too is to know yourself and what kind of personality personality you have. I just and but most importantly here is if they're structured with volume, price, and time. And going back to another lesson from Peter Stottlemyre, he goes, if I wanted to, I wanted to own corn, I wouldn't stand in front of the buy broker in the pit. And you might just say, well,
yeah,
why wouldn't you? Because he's going to take my position away. If there's a bull market and you're standing in front of the buy broker, you're going to get run over. So he said the edge was stand in front of the sell broker. He's giving you edges in a bull market.
yeah,
It's the complete opposite in a bear market, especially in corn, where they're selling from farmers and from funds. You're just standing in front of that. You're going to catch the imbalance. Part of what we review here is to see who's in control and don't fade it. Simple things.
exactly. Great conversation though, and check in shorts. Great comment. We appreciate that. Here's another one. What is that white line in gold? It's flattened out. What did volume do? Trade below it. Up there was an opportunity, and I didn't even trade this today, but when I see it, I'm like, okay, this pattern is valid regardless of the market that I want to trade, right? I can't trade every single opportunity, right? Ash catch them, gotta catch them all, like Pokemon. I can't catch every trade, and I don't need to, right? I only need a couple. Here's gold, Coach Paul. Let's break this down on the daily to start. What are we seeing here?
Well, it's more of the same. Look at how so this market is compressing. Look at the ATR. So and risk is coming out here. When that what does that mean? Balance is coming in. There there is buying and selling and no breakouts. So we're in the middle. We're between the 20-day moving average and the 50, and look at how close they're getting. But the key point is a compression. And what happens out of compression?
Expansion.
Direction.
Yeah, direction.
Expansion is even a better word. So right here, we're still in that. I use the 50-day moving average. It's still underneath it. It has not accepted. The buyers are not in control. The 20-day is under the 50. So there's no direction at this point. We're balance to imbalance. I don't think I don't think personally this will continue much longer.
Yeah,
But we haven't had any proof.
right.
So someone asked about a failed auction. Let's look at gold on a half hour.
I was just framing this out. So a failed auction in profile terms, right? The way you hear Hogue talk about a failed auction, the initial balance, which is the first hour of trade in whatever market that you trade, the initial balance in gold starts at 8:20 a.m. Eastern time. That is the floor open for gold. Right. So 8:20 to 9:20. Here is the initial balance range in gold. Right. So 4702. Again, this is the first hour. I know gold opens up at a weird time. So I'm on a 5-minute chart with this, but I'm marking out the first hour. Here's that first hour. There's the range. So the attempt at an auction outside of this range can't happen before the first hour. If you listen to Coach Ray a lot of times won't take a trade in gold or oil until the initial balance is set. So here's the first attempt at a downside auction, Coach Paul.
Yep.
And
And what do we do? We
failed.
followed. We failed. How did we fail? Well, price left that, and we got some shorts, but no follow through.
Yeah.
Failed downside auction. They tried to take it lower, and if you add that anchored VWAP, where's anchored VWAP?
It's
In the middle
right.
of the
You can barely
range.
see it. It's right in the middle of the range.
Another name for that is price discovery. Let's see what's here. Let's see what's here. And we don't get follow through. Then we turn around, come back into the range. So failed downside auction from the New York Open.
Yes.
And remember, there's 3 openings in commodities. There's the Asian Open, the Europe Open, and the US Open. And this is a commodity. Know those time frames.
Yeah. And again, the initial balance for gold is 8:20 Eastern to 9:20 Eastern. So if you're going to use that time, right? Because Pixie R asked in the chat when trading gold during the New York session, should VWAP be attached to 8:20 or 9:30? If you want to trade the metal exchange hours, it's 8:20 Eastern time, right? Which is where we have this here. It's when you see us take the opening range trade during the opening call. We're taking it off of this thing here. Is the same time for the Asia session? Well, no, the Asia session is going to be 8 Eastern, 8 p.m. Eastern. Yeah.
You,
Hold on, real quick, Coach Paul,
yeah.
because there's a bunch of stuff on social media right now making the initial balance more complicated than what it is. It's like the initial balance strategy. Here's my $500 course on how to identify what an hour is. We learn how to read time in elementary school. So don't let anybody make it complicated for you. The initial balance is the first hour of a range. If you want to look at the Asia session, then the Asia session opens up at 8 p.m. Eastern time. So that's 8 p.m. to 9 p.m. Want to look at the London session? That's 3 a.m. to 4 a.m. Eastern time. The same way somebody looks at an opening range trade, they can look at a 30-second opening range trade, right? Makes sense. 30 seconds, identify a range. That's it. The initial balance is just a fancy word of saying a 1-hour opening range trade. Identify the range, go from there. Don't buy a course. Don't do any of that, please. They're trying to teach you how to tell time. and, and that doesn't work. Like, please don't do that. Uh, so
Okay.
it's a 1 hour opening range trade. Simple. Sorry.
Don't to keep it simple.
Yeah,
And and I just throw one other. It's commodities are different than equities. Equities are local. What
yes.
I mean by local, there's Chinese equities or Asian equity time. There's Europe equity time because that's the local, and then the U.S. It's more important when the cash opens up, when New York opens up at 8:30 Central. Commodities trade 24/7. They never stop.
Absolutely. But here's a failed auction. We traded below. One of the things that we look at for follow through is what is volume saying? Price is going to do what it does. Price traded lower than this first hour range, but volume was still in it. Now, if somebody's giving you this type of sauce, now here's something that you could use. If if I'm looking for a failed auction and price is trading lower with no volume, this is a higher probability of a reversion trade. That's a real trade. So if somebody's giving you that, tell them us here at the buzzer taking 5% on all their course
I
fees.
don't
But there
6%
we go.
now because of inflation.
Yeah, right. All right. Anything else? Any other markets you want to talk about here, Coach Paul?
Yeah, let's look at what we the daily on Bitcoin.
Daily on Bitcoin. Minzy, so you could also just go with the 1 hour time frame and mark the high and low. So here's the problem with that, Minzy, right? If I look at gold, and we know gold opens up at 8:20 a.m. Eastern time. These 1 hour candles go 8 a.m., 9 a.m., 10 a.m. So the initial balance is going to be somewhere in the middle of that. Even if I do that with the equities open at 9:30. So 8 a.m., 9 a.m., 10 a.m. The initial balance is in the middle of these two. My best suggestion is if you're looking at the equities, use 30-minute candles. The first two 30-minute candles, that's your range.
Or the hourly.
But the problem with the hourly is if I use extended trading hours,
That's right.
here's the hourly, right? So unless you go regular trading hours and then do it there, right? If you're using only regular trading hour charts, but just identify however you want to do it. I don't care what you do. If it's from 9:30 Eastern to 10:30 Eastern, you could use a 1 second chart. If you want to identify the range, those are the times. Yes, first two 30-minute candles.
There you
You don't
go.
need a course. I'm spending a lot of time on this. Whatever money you decide to pay for a course, keep it in your pockets. All right. What market were we going to, Coach Paul? I'm sorry. I got
Uh,
distracted, man.
Bitcoin.
Bitcoin.
What
Bitcoin
was
on the daily.
today's low?
20 moving average. Nice test.
We've had a pretty dramatic break, but we still have the breakout and we still have the daily J trade from the beginning of the year, and we're still holding that breakout. Big test today. We've broken most of the week. Was the 20-day moving average, and we had a wick off of that. But I'm going to hone in on the half hour and look for a buy. Now, if it doesn't, fine. All right. But the first test, this is look at the last time we had a break. We tested the 20. We had a nice bounce. Look at the angle of this 20-day moving average. Pretty aggressive. So on that bounce, last bounce, we tested the high of this range that we broke out of. Now we have a secondary test of that 20 moving average. This is an area of interest. And it was a I mean, pretty hard break the last 2 days.
Yeah.
I do like that we got a wick off that 20. That means there was no follow through.
Nice.
Um, and It looks to me like a good. It's setting up for a nice buy. So keeping an eye on that. That's on my play card.
On the scouting report for Coach Paul, micro Bitcoin. Nice selling here today, but is that just
Yeah,
another opportunity to potentially get in long here? Another one, if we look at this, here is last night's open. Break this down on a 30-minute chart. Where we open? Right below that 200 moving average, right below the pivot. Did volume ever cross above? And it did. Decent
and
buying
what?
last night. Go ahead, coach.
Yeah, there was. I actually bought that,
Yeah.
and I think I lost $10
There you go.
because what happened? We
Okay,
had a
hold.
fall break.
I'm gonna try to do this here. I'm gonna try to get into the mind of Coach Paul because we talk a lot about strategy, right? Every once in a while, we'll show where our executions are. I'm gonna assume, Coach Paul, that you were getting along somewhere around 81 200s.
Yep,
And why? Because price left the 30-minute range to the upside. Volume at that point looked like it was ready to go as well. And that's where I'm getting in long. Now, your initial risk on this trade was probably somewhere about right there.
exactly.
And then you
By the way,
close.
the micro Bitcoin's a great place to practice.
Yes, it is.
It's
Now,
almost better than a practice account, but go on.
you close this trade. So you did have to sleep at some point, or maybe unless you didn't. But if you were awake to see this, you would have closed the trade either here or when you woke up, you closed it around here.
I closed it right under. I had a stop right there where I got in when I went to sleep.
Got you. Ah, okay.
It,
That makes sense.
it here's why I had some trepidation
Mhm.
because we're going to go back to this the angle of the 200.
Yeah, sloping downwards.
But we did break. I mean, this was a good. I'll take that. I was like, well, maybe I did have a target of the first level of resistance,
Got you. Up here. 8208 0850
and,
85.
and then we just started rotating around the highs, and I'm like, no, I got tired, so I put it in as unchanged. It got stopped out. Woke up this morning, and it turned out to be a better sell because look what happened. We had that failure under VWAP with growing volume
Yep.
down to but here's what that we had buying at the 20-day moving average. We're still underneath the 200. There's we had some urgency last night, and it's just further proof they don't all work.
Exactly. Can't over leverage. They don't all work. Can't over leverage because they don't all work, man. We are already at time. This was a fun one for sure. Chat, if you've ever been trading and you've asked yourself out loud, what is that white line? Hit the thumbs up button. If you've taken an urgency, if you've taken an urgency trade in the last week, hit the thumbs up button. If you've taken a J trade in the last week, hit that thumbs up button. Maybe a Paul drop, hit the thumbs up button. If you've taken a trade off of a pivot in the last week or so, hit that thumbs up button. If you think Coach Paul is one of the greatest minds in the trading space that we have, I'm going to say that bar none. Been working with this guy for 3 years. Hit that thumbs up button.
Thank you.
If my barber did a good job with his haircut, give him a thumbs up as well. Uh, we appreciate you all being here, Coach Paul. Anything you want to say before we head out of here?
You do look sharp and clean there,
Thanks,
Coach.
man.
I
I
will
appreciate it.
say that. Once again, plan your trade your plan, and we'll talk again tomorrow.
Awesome stuff. If your market order button still works, hit that thumbs up button. If you manage your trade today, hit that thumbs up button as well. And I'll stop there. Trade well, everybody. Manage your risk. I will be on slow markets tonight with Coach Dakota, 8 p.m. Eastern time. Then we got Aaron with the London Open at 2:30 Eastern. D with metal markets at 6:30, and then we'll be back for the opening call tomorrow, 8:15. Slow markets tonight. I'm kind of curious how this is going to go. We have that meeting in China happening, and it starts, I believe, a half an hour after we're done with slow markets. So it could be an interesting one. But make sure you tune in. We appreciate you all being here. We'll see you soon. Bye.